Let us start with a short prayer. Om Sahana Bhavatu Sahanau Bhunaktu Sah Viryam Karvavahai Tejasvinavadhi Tamastu Ma Vidvishavahai. Om Shanti Shanti Shanti. Om Samastajana Kalyane Niratam Karunamaya Namami Chinmayam Devam Sadguru Brahma Vidvaram. Hari Om. I, Malhar Sangvi, would like to welcome you all to the second session of Wealth, Finance and Spirituality by Chinmaya Mission Mumbai and Chinmaya Yuva Kendra. So let us know a little bit more about Chinmaya Mission. Chinmaya Mission was established in India in 1953 by the devotees of the world-renowned Vedanta teacher Gurudev Swami Chinmayananda. Guided by his vision, devotees all around the world conduct a range of spiritual, educational, and charitable activities, ennobling the lives of thousands in India and across its borders. Under his guidance, the mission has continued mushrooming across the globe and stands today with over 300 centers worldwide. Chinmaya Yuva Kendra, or CHIK, is the global wing for the youth of Chinmaya Mission. CHIK conducts different programs for the youth out of mission vision to impart cultural and social values for nation building. Our moderator for today is Shri Pankaj Jaju. Pankaj ji has been associated with Chinmaya Mission for more than 2 decades now. He has over 27 years of investment banking experience, having worked at Inam and Access Capital before setting up Meta Capital Advisors in 2016. He has delivered a host of market transactions across M&A, private equity, and capital markets. Welcome, Pankaj ji. Today, I am honored to introduce one of the best minds on Dalal Street, Shri Utpal Sheth. The stock market is a device for transferring money from the impatient to the patient. This is a famous quote by none other than Warren Buffett, which resonates with our esteemed guest today. Utpal ji is currently the Chief Executive Officer of Rare Enterprises, which is the asset management arm of the big bull Shri Rakesh Jhunjhunwala. Utpal ji was intrigued by the stock market from a very young age, and he followed that interest to become one of the best in his profession. He's also the founder and mentor of Trust Capital, which is one of the leading fixed income firms in the country. Utpal ji is a gold medalist CFA and cost accountant from Institute of Chartered Financial Analysts, India. He believes that wealth creation is a function of value creation, and investing is like entering into a long-term strategic partnership. These ideas were clearly demonstrated in the analysis of his stock, Titan, in the year 2004. He had a clear vision that the jewelry brand Tanishq will become a leader in organized jewelry, and he also advised the management of Titan to focus more on the jewelry business as compared to the watch business. Titan stock price has appreciated almost 300 times in the last 15 years and has created phenomenal wealth for all the shareholders. And that is what he calls the magic of long-term compounding. Like Titan, he has many other fantastic companies in his portfolio. He's a very low-profile and humble person and does not like to come into the limelight much. He's a great thinker who is ahead of his time and an expert at picking megatrends. He has co-authored a book called India's Money Monarchs, which talks about the investing style of great investors. By nature, Utpalji is reserved and a rare speaker, but an excellent teacher, which is why we are privileged to have him here on our platform to share his thoughts. I, for one, am extremely inspired by his work ethic and mindset. It is said that wise men, they seldom speak, but when they do, they distill the essence in crisp and profound content. So it pays to listen and digest. Looking forward to an insightful session. Over to you, Utpalji. Thank you.
Thank you for the kind words, Malhar.
Thank you. Hari Om.
Hari Om. So, Pankaj, would you want to say something or should I start?
Utpalji, you can start, please.
Okay. So let me start by saying that this is probably one of the toughest topics that I've ever spoken about. It's not easy, and I will seek the liberty to modify the topic slightly. I will make this about the parallels between spirituality and investing rather than between spirituality and wealth and finance. I think both spirituality and investing start with a belief in a larger power. Spirituality starts with a belief in a larger power, namely God, whereas investing begins with the belief in a larger power, which is the power of markets, the power of free and fair markets. To be, to walk the path of either spirituality or investing, one must have humility, one must be humble, and one must introspect. I think both these qualities are necessary for each of these two paths. Investing is the quest for terminal value, like spirituality is the quest for salvation or nirvana. It is not, um, yesterday Nilesh Bhai differentiated between investing and trading, and I don't want to reiterate that. But I want to emphasize that investing is this quest for terminal value. This terminal value is a distant and dynamic truth that we seek. And I would emphasize each of these words, distant and dynamic truth. It keeps changing, it keeps evolving. You feel you are getting closer to that terminal value, but the terminal value shifts all over again. There are timeless principles in both spirituality as well as in investing. To name one, value is never a constant. Value keeps evolving. There is this excellent book on value migration. So, value also keeps migrating. Both in spirituality and in investing, it is your state of mind that matters. Without your state of mind being right, it will always be tough to follow either of these paths. I'm raising these similarities not because I want to equate investing with spirituality. I think that would not be right. Investing is much smaller in the context of spirituality. But I want to highlight the similarities so that we realize the common principles here. Both investing and spirituality involve resisting temptations and distractions. However, the way that you resist temptations and principles are also equally important. Resisting temptations and principles by denial is one part, but resisting temptations and distractions by making them irrelevant is another path. I would advocate the latter. In investing, as in spirituality, commitment and discipline are paramount. It is your intent, your commitment, your discipline, and your focus that takes you along each of these two paths. And mind you, each of these two paths are long journeys where The journey is more important than the destination. Many, many years ago, probably 2 decades ago, Vallabhai asked me a question: what is the difference between wisdom and intellect? And he immediately said that you need not answer this today, but when you do find this answer, please call me. And over the years, I've had the opportunity to keep reflecting on that one conversation. And I can tell you that that is a profound conversation to have with yourself. Wisdom versus intellect. And it is as important to have this conversation for spirituality as it is important to have this conversation for investing. The best of investors are not the smartest of investors. The best of investors are wisest of investors. We all know about power of compounding. But power of compounding is not just a mathematical concept that applies to interest rates. It applies to very, very many things. It applies to your investment returns. It applies to your family life. It applies to your happiness and joy, everything. You have to allow all these good things to keep compounding. However, please realize that the negative things also keep compounding. So it is up to you and up to each one of us to brush aside the negativity and to focus on the power of compounding for all the positive and powerful aspects of life. Both in spirituality and in investing, we learn the power of patience, the importance of disavowing the instant gratification, of walking away from instant gratification. This requires not just a discipline, but again a state of mind. We learn um, in investing, as in spirituality, that we focus on controllable factors rather than the uncontrollable factors, and that you can make a huge difference just by focusing on the controllable factors. Like we learn about the difference between stimulus and reaction, the same way we learn the difference between the power of constant action and wise inaction. So I see all these similarities and parallels, but the one that really comes to my mind the most frequently is the fact that the consequences of your actions and decisions are always very long term in each of these paths. You don't get an instant report card, but you do get a report card in the long term. So think carefully about the long term consequences of your actions, your decisions. But your actions and decisions are a reflection of your thought patterns. They are a reflection of your mindset. And therefore, you have to keep evolving all of those. Because both spirituality and investing are such journeys, such long journeys, and not destinations, the constant learning and adapting are equally important. You may think that you know a lot, but you have to know that the lot that you know is very little in the larger context. So constant learning, constant evolution are very imperative. I will stop here on drawing the parallels between investing and spirituality and go a little further into only the specifics of investing. And enough and more has been spoken the about asset allocation, about stock picking, and all of that. I would like to emphasize on some lesser known elements of managing your wealth or your finances and investing it wisely. I would like to concentrate on how one builds portfolio weights of specific stocks in your portfolio or specific assets in your portfolio and the risk management thereon. And the principles of asset allocation determine that we use um, diversification. I'm an advocate of concentration, not acute concentration, but concentration nevertheless. However, this element of concentration itself is a function of your risk tolerance, the size of opportunity, and above all, your conviction and patience. If you have clarity about these factors, then you can go with concentration in your portfolios. However, this concentration requires you to know your stocks, their businesses, their management teams, their promoters very deeply, to think about all the changes that are happening and how that company is going to adapt to those changes. In thinking about the history of mistakes and the history of successes that that team, that management team, or that promoter has had, and how they have corrected mistakes, how they have leveraged their advantages. So, I'm an advocate of concentration. I also want to espouse and share uh, one methodology that I have found very useful in portfolio construct. We think of portfolios as a reflection of two characteristics. One is megatrends, and second is leadership. Each we we filter each company on the basis of these two factors, and only when we find companies where both these factors are applicable, then we drill deeper into that company. Having said, after analyzing that company and its promoters and its businesses, we come to assigning those companies that satisfy our filters into clear leaders, near leaders, and emerging leaders. While all the time, each of these leaders are participating in a few mega trends that we've identified. The clear leaders is where we build a lot of our concentration. Top 4 5 stocks to reflect 50 60% of the portfolio. These clear leaders are effectively the ballast of the portfolio. These clear leaders are battle tested companies, businesses, and management teams. These clear leaders are companies with promoters and management teams who have an established record of corporate governance, capital allocation, discipline, and so on. The near and emerging leaders justify a lower degree of concentration. So the newer leaders, again, a combination of five, six of them, to comprise about 25 to 30% of the portfolio. And the emerging leaders represent optionality in your portfolio. And these emerging leaders then um, become about 10% or so of your portfolio. This kind of a discipline will keep testing your conviction as market cycles happen. But while your conviction may be tested, both your conviction and your patience will be rewarded. It is imperative. It is imperative to hello, can you hear me?
Yes, we
Yes,
can.
Yeah, okay. Sorry. Um, yes, it is imperative to ensure that your portfolio construct can embrace volatility, because volatility is not in your control. It will play out. How you behave during that volatility is what will differentiate you. However, your behavior pattern itself will be influenced by your portfolio construct. Hence, each of these factors are linked. Protect your state of mind at any and every cost. The most important element of this portfolio construct is that it allows you to to keep looking at that small um, bucket of emerging leaders. You will always um, learn from all the changes that are being driven by innovators. The debate between incumbents and innovators will always continue. However, I think as wise investors, one would keep looking for adaptable management teams. If one truly believes that this journey of investing and of spirituality have these common paths, then one will work a lot on oneself rather than trying to find the next most juicy bit of information. We are moving from an era of deficits to an era of abundance. Again, that is a state of mind more than a reflection of the per capita income. Entry barriers are diminishing and yet rising in different ways. Investing today is more interesting and more challenging than it ever was. And same way, I feel spirituality today is more interesting and more challenging than it has been. I'm not very well qualified to speak on subject of spirituality, but I must say that I find these parallels to be very intriguing. And I know that my mentor, my friend, philosopher, and guide, Rakesh, keeps drawing parallels between markets and other things. And yet I find that the parallel between markets and spirituality has been very, very compelling. I must share that whenever I have made mistakes in the past, and I'm sure that I'll keep making in the future as well, um, two principles have always guided me. One is that I should not repeat the same mistake again, and second, that I should learn from the mistakes that I have made. And trust me, Rakesh, she has inculcated this passion about learning from mistakes and walking away from mistakes in me. And I think this ability to walk away from mistakes is central in to spirituality as well. The consequences of a mistake in the investing world are different, but the consequences of not walking away from mistakes are the same. I will leave all of you with these thoughts and draw this parallel and these little nuggets about portfolio construction and delve a lot more on question and answers so that I can respond to whatever queries you have. Thank you very much.
Thank you so much, Utpal. This has been amazing and so beautiful. The way you've brought out the parallels between spirituality and investing, that how it requires a belief in a larger power, uh, the qualities of a seeker and an investor, how certain principles are timeless, that it is ultimately commitment, discipline, and perseverance which help you cross the hurdle, that this is not something that is short term, but it has the power of compounding that plays out with the report card being visible over time, and how consequences are seen in the long term. And then using all of this to also talk about portfolio allocation and weightage, which is something that many of us often miss out in the entire den of looking at gains in the short run. I think this truly speaks about your deep thinking and the way you approach this subject completely differently. Utpal, having worked with you, I know that you are a very deep thinker and you do a lot before you put forth your thoughts. And clearly, in today's talk, that was again very much visible. So, my first question to you while our Q&A builds up is, what is it that makes you think so deep? What kind of work do you do? And are there learnings for all of us if we were to try and follow in your footsteps?
Pankaj, I don't. It's not that I do work which is different from what most of us do. Um, but I do what I love, and I love what I do. This is passion for me. It is not work. Um, this is something that I do 24/7, um, and I enjoy doing it from from the bottom of my heart, so to say. I'm not sure about you know you walking in my footsteps, but I must tell you, Pankaj, that in my when we were working together, I enjoyed our work together, and there's a lot that I learned from you and each of our other colleagues then as well. And I truly believe that um, learning is a constant endeavor, and we all come together for a purpose. So, Pankaj, it has been my privilege as well.
This humility of yours is remarkable. And in one of the interviews of yours which is available online, you were asked to sum up your decades of experience in one word, and you said humility. Can you please elaborate on that?
As I explained today, also, Pankaj, this humility is a condition precedent to being a good investor. Um, Otherwise, one is vulnerable to arrogance and hubris, and I don't think it is worth it. I don't think any one of us here is here to prove anything to anyone. What is most important is to be aware of the journey, is to be aware of the timeless principles, and to do your best uh, on the way.
Thanks, Utpal. Utpal, you spoke about choosing companies and quality of management came about in that. You spoke about mega trends, then you spoke about clear leaders, and then how there are certain qualities of management. Can you help us with some examples in terms of what is it that you look in a management, and how can an investor identify or get to understand the quality of a management?
Okay. Pankaj, we've all grown up looking a lot at numbers. And while numbers are definitely a guide, I think more and more it is the intangibles which are influencing investing decisions. It is the intangibles which determine um, the quality of the management. It is the intangibles which determines how investors perceive that company and that management team, and the multiples that investors assign to them are also dependent on the intangibles. Now, assessing these intangibles is far more difficult because it's much more qualitative. Okay. Over the years, Pankaj, we have learnt as to what are the things which go wrong usually. So long, like we've learned that mistakes on capital allocation, on capital structure, on corporate governance, or in treatment of minority shareholders, these are the causes which have the greatest consequence and which are the most probable in destroying value. So long as one can avoid those and have filters to prevent that, then one can concentrate on the factors which create value. Again, the factors that create value also are very soft. More and more, this is a world where talent is important. This is a world where the culture that a company creates, that a company has, which is nurtured by the management team and the promoter, is very important. That culture is priceless. It cannot be measured, but it can be felt. Hence, I would say, Pankaj, focus on the intangibles more than the tangibles.
And I guess, like spirituality, one has to experience and walk the path to understand what are the intangibles to focus on. But very clearly, there are value destroyers which we need to avoid, and value creators and traits of those in managements which we want to look at. So as we are going through some of the questions that have come up, one of the questions is that uh, there's a you mentioned the power of compounding and investing being a long term goal with mega trends and leaders as your preferred way of investing. How should people think about commodities and cyclicals in this context, like steel, sugar, and oil? Are these to be avoided?
So, um, I would link two factors, Pankaj. One is the power of compounding, and second is mega trends that I talked about. Okay. Um, if there are mega trends, then I would distinguish a mega trend from a fad or even just a minor trend. Okay, mega trend is something that persists over a decade and brings about very large structural change. And the megatrend itself is an outcome of many structural factors. So, if there is a megatrend, then by all means there may be opportunities in the commodities as well. Having said that, when I link power of compounding to that, if one concludes that these mega trends um, are not mega trends but just cycles, then I would stay away from just cycles. Why? Because everybody talks about power of compounding. What one forgets is that the secret behind the power of compounding is consistency. So everybody knows that if I compound my money at 15%, then in 20 to 30 years, this is what is going to be the outcome. But the underlying assumption is that 15%. You have to have that 15% consistently. And what happens in cyclicals is that you don't get that number consistently. The degree of volatility in the returns is much higher. So I will distinguish, rather than to talk about commodities, I would distinguish between structural themes or megatrends and cyclicals or cyclicality. I believe the power of compounding is applicable to the megatrends or the structural themes.
So there are two questions emerging from this. One is, how do you identify mega trends, and are there any mega trends that you would like to speak about? And secondly, when there are opportunities which are cyclical, it becomes very tempting. So for somebody who's starting off on a career, how do you resist the temptation of trading and participating in what looks like short-term opportunity?
Okay, let me answer the second question first. Rakesh ji always tells it very nicely. And he says, Nastik ko astik mat banao, samay bana dega. So I'm not here to preach to anyone that trading is not good or that this is the problem with trading and so on. I think it is best that each one of us experiences it, learns from it, and then evolves. So, having said that, let me come to the first part of the question. May I request you to repeat the first part of the question again, Pankaj?
Sure. So, how do you identify mega trends? And are there any mega trends that you are seeing today which you would like to share with this group?
Sure. Um, Many years ago, in the late 80s, I read a book called Megatrends, which was written by John Nesbitt and Patricia Nesbitt. And that firmly planted that idea in my mind, Pankaj. That book actually talked about all the changes that they expected to happen um, in the future, including the fall of the Berlin Wall, the and various other such things. And it was amazing to see how, over a long period of time, quite a few of those predictions have played out. Then in the 90s, I read a book called Being Digital by Nicolas Negroponte. And again, it was amazing how all of that played out. So I think extensive reading is very essential. And I'm sure you remember that fantastic speech um, given by Steve Jobs at Stanford graduation, connecting the dots. So extensive reading along with connecting the dots somehow makes it all come together. However, all the megatrends are not so implicit. There are some which are quite explicit also. For example, the fact that India is now close to $2,000 per capita, and that the next $2,000 per capita that India is going to add, much less of those will be spent on necessities, and much more is going to be spent on other things, is very evident. So I think consumption continues to be a mega theme. It has been a mega trend for the last 2 decades, and I think it will be for the next few decades. Urbanization is a very powerful theme. The whole digitalization, right, is itself a very powerful theme. uh, I think sustainability is a very powerful theme in in all its aspects, whether it is renewables, whether it is electric vehicles, and so on. I think Internet of Things, 3D printing, etc., are also going to be mega trends, and all of these will play out over many decades, Pankaj. So it's not as if you have to be the first to figure it out. What is important is to, when you figure it out, to build the right conviction and then to identify the right player to back, the right company to back, and put your conviction into those and weigh that bet appropriately in your portfolio.
So I guess there is no shortcut to this, but as you read, you will be able to connect the dots and figure out mega trends, and many of them are explicit. You should have the conviction to stay the course and not lose hope in between. There's a question that keeps coming up from the youngsters time and again, which is on cryptocurrency. Is it a mega trend or a fad?
Well, it's already lasted quite a bit. So I cannot put it in the bucket of a fad. Um, and yet, I don't think it has the legitimacy that it needs to have. And therefore, I would not yet put it in the bucket of a mega trend. But I must say that the underlying principles of cryptocurrency uh, are something which necessitate a change. So I feel quite sure that some country or the other will take the lead in in delivering a legitimate cryptocurrency in some way, a digital currency, if not a cryptocurrency.
So the trend is there, whether it's going to be currency A or B or in some other form is something that has yet to evolve.
Yes.
Uh, Utpal, one question that's come up is that you've spoken about concentration. You also spoke about risk management. Uh, which should one prioritize over the other?
Well, it's a question of balance, like in spirituality, as in investing. It's a question of balance. It's not one over the other. But uh, while they both seem contradictory, Einstein has defined genius as the power to hold two opposing ideas in your mind simultaneously. So I would say that both are important. Risk management is not just a mathematical exercise of identifying value at risk or identifying portfolio correlation alone. I think risk comes from not um, doing your homework well enough. It comes from not having the insights necessary to build your conviction and not having the patience to allow your conviction to play out.
Does it mean that if you've done your homework well, you have the conviction and you've ticked all the other boxes, if a certain stock becomes a very large part of portfolio, you continue to hold on? Or do you at some point of time sell even if there's nothing wrong with the business?
Yes, I would say that it is all right, though there is always a line. Most risk managers, a 15% or a 20% weight in the portfolio would start alarm bells ringing. I would go up to 30% and not have alarm bells ringing. But will the alarm bells start ringing at 40%? They probably will.
I think that's pretty clear. Utpal, one more question that's come up is that most of the people, when they look for advice and they speak to some guru in the market, the question they ask is "Kya kharidu? What should I buy?" But nobody figures out what to sell or when to sell. But in reality, capital is created, wealth is created, or at least the cash flow is booked when you sell. So, how should one approach selling? What's the right time to sell a stock?
I think selling is a very difficult art, Pankaj. And over time, I have learned that selling becomes important when there are uh, three distinct conditions that are fulfilled, and all three are different conditions, so they don't have to be fulfilled simultaneously. The first time that you consider selling is when your hypothesis about a particular um, investment breaks down, or a key component of your hypothesis breaks down. Then you sell, irrespective of whether you're making money, whether you're losing money, whether the market is bullish, whether the market is bearish, but you sell. That selling is a correction of a mistake. Second, you sell when you feel that there is absolute lunacy, and I'm stressing on the word absolute lunacy in valuations. And you may end up selling a little early, or you may end up selling a little bit late, but you have to be able to sell when there is absolute lunacy in valuations. However, such lunacy is not always absolute lunacy. Sometimes it is relative lunacy as well. And this part of selling is more difficult than the first part. And the third part is, because I advocate concentration and suggest that one does not have more than, say, 15, 16 stocks in your portfolio across those three buckets that I enunciated: clear leaders, near leaders, and emerging leaders. Then each stock competes with a new idea. Every time that a new compelling investment idea comes to you, you have to think about how that idea is better than the ones that are already in my portfolio or not. And if you find compelling evidence to do so, then you sell the one that you already have and buy the new one. But it is quite rare.
So, you spoke about complete lunacy and relative lunacy. And you also spoke about, there are situations in the market where you look at selling. Now, for a regular investor, how does he avoid the noises that are surrounding him in his quest to make wealth? And more so, for the young folks who are on this call, uh, I've known you for so many years. You've always been cool and composed. And I'm assuming that even in March 2020, you would have been sitting with a smile the way you're sitting right now. So, what is the secret sauce, and is there any learning for us from that?
So, Pankaj, I wish what you said was true, but I think each one of us is human. We have all our weak moments. It is important to recognize your weaknesses and deal with those weaknesses. And that's the path we are all walking. Having said that, this complete lunacy and relative lunacy that we talked about, I remember way back in the 90s, my friend Naveen Agarwal and I had made a presentation on IT services stocks, and the late Chandrakant Sampath Bhai, uh, we showed the presentation to him, and he said that this is absolute lunacy, that the stocks are valued so highly, and then within a few months the stocks actually doubled, and my friend Naveen and I were even more excited, and we met Chandrakant Bhai again, and uh, we were hoping that he would change his mind, but he had not, and he said, "This is absolute lunacy once again." And once again, the stocks moved up. But we all know how that played out, Pankaj, and that wisdom is something that one builds over years. Um, it's not that there is a formula to identifying that lunacy. And remember that in financial markets, markets can be irrational longer than you can remain solvent. Of course, so long as you're not leveraged, and so long as you're just investing, hopefully one doesn't have to come across that. But it's not a formula, Pankaj.
So, for youngsters who are looking at creating wealth, and there are a couple of interlinked questions in this. People say that spirituality is possible once you've created wealth and don't have to worry about it. And hence, let us focus on creating wealth first. Now, when somebody looks at creating wealth, how should he go about if he has minimal cash flows? How should one construct a portfolio? How should one look at, a combination of, all that you've spoken about when the means are small?
Pankaj, we all have come from very humble homes, so to say, and we've all walked that journey. So those are very legitimate questions, and I think it is only when they realize the power of compounding that they will start, no matter how small or large. And I remember when I was in 12th grade, I'd just given my 12th grade exams, and I attended one seminar, and there was a question which was asked that if there is a paper which has a thickness of 1 millimeter, and you keep folding it, then after um, how many folds do you think you need to reach the moon? And they said that this number is the distance from the earth to the moon. And I think everybody thought about it, and then I realized that this is 2 raised to n minus 1 as the answer. But then the next question they asked was, in how many folds will you be halfway to the moon? And that was 2 raised to n minus 2. So that that is when the penny dropped in my mind, that no matter how small the starting point is, what is really important is at what rate you compound, and more importantly, how long you compound. I think people always think about at what rate you compound. People don't think enough about how long you compound. And once you realize the power of those two variables, then um, you know you will have the right frame of mind. And as I said, I'm not here to preach. I'm not here to say you should have spirituality before you start investing. I think you will find both along the way. नास्तिक को आस्तिक मत बनाओ, समय बना देगा.
True. And while all of us will work on some of these principles, I'm going to ask you for any last advice that you have for the youngsters on this group as they embark on their journey of wealth creation spiritually, and any books that you recommend one should read.
Sure. So I'm a little old-fashioned, so I'll start with some of the old-fashioned books. Um, Poor Charlie's Almanac, the uh, the Craft of Investing, the I think there's a book called Lattice Works. These would be some of the books that I would start with, and over the years build it up. As I said, keep connecting the dots. And sorry, Pankaj, can I request you to repeat the first part of the question, other than the books?
Yeah, any advice for the youngsters who are on this session as they work on building their wealth? And there's one more question that's come up while I asked you this, which is any learnings from your association with some of the best minds in the investing, including yourself, also from Rakesh ji, because he's somebody who's known to be a savvy investor as well as a very long-term investor, a trader as well as a long-term investor.
Sure. I think I will say, we talked about the books. Let me complete that part first. Apart from the books on investing, I would say read wide and read deep. Okay, don't limit your reading. And you will find the dots connecting when you read wide and read deep. Coming to my journey, I think I've been very, very fortunate to have learned from some of the best minds in the markets. Of course, from Rakesh ji, but also from my time at Inam, Pankaj, when we were together, from Nimish Bhai, Vallabh Bhai, Akash, Manish Chokhani, and also from my dad and Asit Koticha before that. So I've been blessed to have learned from some of the best in the markets. I would say this learning is a constant journey. The advice I would leave our friends with would be to find your passion and to find yourself. Both are important. There is no point in trying to clone yourself to somebody else, because you will never be able to walk the path long enough that way. So long as you find your passion and find yourself along the way, I believe things will work out. Believe in the power of compounding, think long term, learn from mistakes, and keep adapting.
Uh, Thank you so much, Utpal. This has been really, really, really amazing. I have gained a lot out of this session, and I'm sure all the participants here today would be much richer in terms of understanding and with a task list of what they should do and not do as they embark on their dual path of spirituality and wealth creation. With this, I'll hand over to Vineet.
Thank you so much, sir, for your time. And on behalf of the entire Chinmaya family, I am very grateful to you for everything that you told us. And some things in very simple words that you have explained, that about humility, about investing, and your entire personality is so calm, so peaceful that we feel that it's like it's a spiritual session and not just an investing session. So thank you very much. I'm very
Thank you very
grateful
much.
to Pankaji also for facilitating this wonderful, interactive, invigorating Q&A session and stimulating all our minds to think a little bit more, to push our boundaries a little bit further, and to evolve together as humans and as a beautiful society. So thank you, Pankaji. Thank you, Malhar, for the wonderful comparing and introductions. To all our dear participants, our listeners, I would just like to bring your attention to a few very, very important announcements. The first one, which you will find in your chat, is this talk will be uploaded. It's actually uploaded. It's live on the Chinmaya Mission Mumbai YouTube channel, along with a lot of the other talks of Swami Chinmayananji and a lot of the work which Chinmaya Mission does for society and what it tries to teach through Gita ji, through the Upanishads. So please do log in and learn as much as you can from there. Secondly, I'd like to bring to your attention, there will be a poster being shared on your screen soon. 8th May is the Jayanti of Swami Chinmayananji, and through this beautiful Gyan Yagna, inaugurated by our very own Honorable Prime Minister, Shri Narendra Modi ji, it will be flagged off. It will be a video series of lectures on YouTube starting on 8th May at 7 o'clock. So please do log in at YouTube Chinmaya channel and take maximum benefit of, like Utpalji said today, read deep, read wide, learn as much as you can. Thank you. Thank you all so much. We'll conclude today's session with a short prayer for world peace and happiness for everyone. ॐ सर्वे भवन्तु सुखिनः, सर्वे सन्तु निरामयाः, सर्वे भद्राणि पश्यन्तु, मा कश्चित् दुःखभाग् भवेत्। असतो मा सद्गमय, तमसो मा ज्योतिर्गमय, मृत्युर्माम् अमृतं गमय। ॐ पूर्णमदः पूर्णमिदं पूर्णात् पूर्णमुदच्यते पूर्णस्य पूर्णमादाय पूर्णमेवावशिष्यते। ॐ शान्ति Shanti. Shanti. Hari Om. Shri Guru Pyo Namah. Hari Om. Thank you so much, Utpalji, once again for being a
Thank
part of our Chinmay Mission platform.
you. It was a privilege.
Yeah, sorry, one part. Can we have everyone switch on the videos? We'll take a Zoom selfie with Utpalji and everyone. That is, I, yeah, you can start it.
Everybody smile.
Thank you everyone for logging in.
Thank you.
I hope you had a wonderful 2 days.
Thank you very much. Thank you.
Thank you, Utpalji.
Thank you, Hari Om.
Thank you, Pankajji.
Pankaj ji.
Thank you, everyone. Hari Om.
Hari Om.